So errors can be there. So trial balance is a statement of debit and credit balances of ledger accounts, and it is prepared to check the arithmetical accuracy. We all know this thing, arithmetical accuracy, whether the uh, books of accounts are correct or not. The total of the debit balance of trial balance should be equal to the total of credit balances. This is based on the principle that in double entry system, for every debit, for every debit, for an equal amount, there is a credit. This is a double entry bookkeeping system in which for every debit of the same amount, there is a corresponding credit. So a trial balance should be equal, but trial balance is equal, but still some errors can be there. So we can say that the matching of trial balance is not a conclusive proof of correctness of books of account. Correctness of books of account. So I just want to tell you here that if trial balance is not matching, then it's certainly clear that there are some errors, because if there are no error, then the trial balance match. But it does not mean that whenever the trial balance is matched, that there cannot be any error. Some type of the errors are there which can be there, and trial balance matches. So trial balance is not the conclusive proof of correctness of books of account. So errors may be there, but the trial balance can match. So if the trial balance is not matching, then it's very much easy to know that the error is there. Then when it will be difficult, when the trial balance is matched, but still the errors are there. So in this chapter, we will learn that how many type of errors are there, and due to which type of errors the trial balance will be matched, and which type of errors will lead to the not matching of the trial balance, then how to rectify those errors, because it is neither advisable nor feasible to reopen the books and do the corrections in the books, because once we have prepared the books, once we have prepared the journal, ledger, then trial balance, then we will be able to come to know that there are certain errors. Then again going back to the journal, do the correction, then do the corrections in ledger, it will be a lengthy, quite lengthy process. So to avoid all these things, what we can do, we can pass a rectification entry. Rectification entry means to nullify the effect of the previously done mistakes in the current year. We can pass one simple journal entry which will be rectifying or reversing the effect of all those errors which we have committed in the past. Okay, so even when the trial balance matches, some errors may still remain in the accounting records. Clear? So in this chapter, we will be finding out which errors will be affecting the trial balance and which errors will not be affecting the trial balance, what are the types of errors, and how those errors can be rectified. Basically, this whole chapter is totally a journal-based chapter, and it's a very easy. So first topic in this chapter is classification or types of errors. So understand this topic, because this is the only theory topic in this chapter. Then we will proceed for the numericals, and this theory topic will be giving the base for the numericals. Types of errors. So basically there are four types of errors. Which four types? Four types of errors. Which four types? First type is errors of omission. Second type is error of commission. Any theory question can come on any type of error. Error of omission, error of commission, error of principal, and compensating errors. Compensating errors. And there are further subdivision of the errors. Error of omission. So error of omission means forgetting. So we have either forget to record the transaction completely or to record it partially. We have forgot to record the transaction partially. Like you all know that there are two accounts always in every transaction. So we have posted the entry in one account, but forget to post the another account. Then it will be the partial omission. So omission means if a transaction is completely or partially omitted from being recorded in the books of account. As the name implies, omission means forgetting. We have forgot to enter the transaction in the books of account. So this omission can be of further two types: complete omission and then partial omission. Complete omission means we have not recorded the transaction at all. Like you have purchased goods from Ram and you have not recorded it. You have forgot to record it. If we are not recording the transaction at all, then definitely it will be not affecting the trial balance. So in this case, trial balance matches because we have purchased goods from Ram. So we have not credited Ram's account, or we have not debited the purchases account. So both the aspects are not recorded. So in this case, it is known as complete omission. So there will be no effect on trial balance because neither the debit side of the trial balance of the account or the credit side of the trial balance is affected. So in that case, trial balance will be matched, but still the error is there. Why? Because we have forget to enter the transaction. So if we have forget to enter any transaction, completely forget, neither the debit or nor the credit aspect is recorded, then it is known as error of complete omission. Partial omission means we have not recorded only one part. One part is recorded and the other part is not recorded. Like the debit aspect is recorded and the credit aspect is not recorded. So only one aspect is recorded. One aspect is recorded. Then it is known as partial omission. Like credit sale of goods to Ram recorded in sales book but not posted to Ram's account. Like journal entry, we have done complete journal entry, credit sale to Ram. So when we sold the goods to Ram, then the entry will be Ram to sales. Now this transaction will be posted in two accounts. One is the Ram account and the other one is the sales account. So if we completely forget to post this entry, then it will be the error of complete omission, or we have not recorded, then it will be known as complete omission. But if only one aspect is recorded, posted, like we have posted the transaction in Ram's account. So Ram account on credit debit side to sales, we have posted this, either this or we have posted only in the sales account. Sales account, the transaction will be by Ram. So you can see that the transaction is having debit aspect and credit aspect, and in error of partial omission, we have forgot to record one aspect. One is recorded, either we have posted the transaction in Ram account or we have posted the transaction in sales account. So while making trial balance, the one side of the trial balance will be more, either of the debit side or of the credit side, because the transaction is recorded in one side. So the trial balance will not match. So this is all about the errors of omission. Two type of error of omission: complete omission and partial omission. Okay, so complete means we have not recorded the transaction at all, or both the aspects are not recorded. And partial means only one aspect is recorded. Or some other type of partial omission can be there, like we have omission in carrying forward the total from one page to another page. When we are making the journal or ledger in actual, then one page total is carry forward to the other page. So sometime we may forget to carry forward the one page total to the another page. In this case, again, the partial omission error is there. Next is the error of commission. So in error of commission, it is of four types. So error of commission is of four types. Error of commission. It is of four types. Which four types? First type, error of recording. Second type, error of casting. All these are important. Any theory question can come. As well as this theory topic is important for understanding of numericals. Okay, so try to understand it in with proper care. Error of carrying forward. Carrying forward. Then error of posting. Error of commission means These are those errors which arise due to wrong recording, wrong casting, wrong carry forward, wrong posting, etc. Error of wrong recording, wrong casting, wrong carry forward, wrong posting. Wrong recording, like you have purchased goods. Error of recording basically will not be affecting the trial balance. Why? Suppose you have purchased goods from Ram and you have recorded it as you have purchased goods from Raj. Okay, so when you have purchased goods from Ram, the entry will be purchases account debit to Ram. But instead of writing Ram, you have written purchases account debit to Raj. So we can say the side is correct. Ram is also credited, Raj is also credited. Only the name has been changed. So changing of name does not affect the trial balance. Why? Because the transaction will be recorded on the credit side of trial balance. It hardly matters then whose accounts in whose account the transaction is posted. Okay, Ram account or Raj account, name does not matter in trial balance, because while balancing the trial balance, we are not watching for the name of the accounts. We are just looking for the amounts. Amount should match irrespective the name of the account. So in this case, trial balance matches. And in partial omission, trial balance will not match. In complete omission, it will match. And in wrong recording, the transaction will be recorded on the correct side, but in the wrong account. So that's why it is said wrong recording. Instead of Ram, we have credited Raj. Okay. So errors of casting. These errors arises when a mistake is committed in totaling. Okay, the mistake is committed in totaling. Like we are preparing, casting means totaling. Casting means doing totaling. Whenever we are making any book, whether it is sales book or purchase book, then we are at the last to close the book, we are making the total of the books. Sales book, purchase book total, and we are writing purchase account debit, sales account credit. So suppose the total of sales book was 10,000 and by mistake, we have written it 1,000. So 10 is more or less. It means the wrong casting. Totaling is wrong. So by mistake, we have written one more zero or one less zero. Then it will be known as wrong casting, and this will be also affecting the trial balance. Trial balance do not match. Do not match. Don't match. Okay. Third is the error of carrying forward. Carrying forward means the error arises when a mistake is committed in carrying forward a total of one page to the next page. Suppose we are making a journal. So in that journal, total of purchase book is carried forward as 10,000 instead of 1,000. Here the totaling is made wrong. And carrying forward means on the one page we have done the totaling correct. The totaling correct 10,000 was there, but we have written on the next page. In the next month when we were preparing the next page, this totaling was carried forward as 1,000. So the mistake is same. Here the mistake was in totaling, wrong totaling, and here the mistake is wrong carrying forward. So it will also affect the trial balance. Trial balance will not match. Then error of posting. Error of posting means the transaction recorded in the books of original entry is incorrectly transferred or posted in the ledger. Like you have purchased the goods. So the posting will be done in purchase account and whosoever is the creditor, suppose Ram. But instead of writing in purchase account, you have posted this transaction in sales account by mistake. The posting is done incorrect. So again, the trial balance may or may not affect. While I'm telling you may or may not affect, because if we have to post in the debit side and we have posted in the credit side, then trial balance may not match. But if it is the case that Ram was debited and instead of Ram, we have debited or posted in the account of Raj. So the name of account is incorrect, but the side is correct. So in that case, trial balance will match. So due to the errors of posting, trial balance may match or may not match. If the account is correct, but the side is incorrect, then the trial balance will not match. But if the side is correct and the amount is incorrect, then the trial balance will match. So while doing practically all these problems, you will be in understanding in a better way, because here we are doing theoretically and practically you will enjoy this chapter. It's just like playing a game. Some error is incorrect and we have to do the correct it. Okay. So error of commission means the errors which are arises due to wrong recording, wrong casting, wrong carry forward, wrong posting. Clear? Next, third type of error, error of principle. Error of principle. Errors of principles are those errors which are committed due to in contravention of accounting principle, which are recorded in contravention of in contravention. Contravention means breaking of, breach of, in contravention of accounting principles. In contravention of accounting principles. It means while posting, while recording all these transactions, we have not followed the accounting principles. Okay, like some of the transactions we have already done. Two examples are there for these type of errors. Capital expenditure treated as revenue. Can you give me any examples of capital expenditure? Capital expenditure treated as revenue expenditure, or vice versa. Vice versa, like revenue expenditure treated as capital. So this is the breach of accounting principle. So that's why these errors are known as errors of principle. So I'm telling you examples here. Like for example, I have purchased a machine. Yes, anyone can give me example of capital expenditure or revenue. Very good, Siddhi. Very good. So suppose I have purchased a machine costing rupees 1 lakh. 1 lakh. Okay. So what is this expenditure? Purchase of machine. Yes, very good. It's a capital expenditure. Purchase of any asset is capital expenditure. Clear? Now I have paid rupees 5,000 for installation of this machine. Installation of this machine. So what is this amount? Installation of, I have paid wages of rupees 5,000 for installation of machine. So what is this expenditure? Capital or revenue expenditure? Yes, please tell me. Installation of machine is capital or revenue expenditure? What is it? Yes, I'm waiting for your answer. Yes, very good. Capital expenditure. As I told you that until or unless the machine starts working, each and every expenses related to machine will be added to the cost of the machine. So installation wages paid for machine is the capital expenditure. But by mistake, so when we have purchased the machine, this entry will be passed. Machinery to bank, 1 lakh. So when we have paid the installation wages, then again this entry will be passed. Machine to bank, 5,000. But suppose one accountant is inexperienced. He was not having the knowledge about this. So he has passed the entry wages to cash. Instead of passing this entry for installation of machine, he has passed this entry wages to cash. So this is the case when capital expenditure is treated as revenue expenditure. Capital expenditure is treated as revenue expenditure. So in this case, that there will be no effect on trial balance. Why? Because amount is kept in the correct side, but in the wrong account. So trial balance will match. Machine is debited, wages are also debited. So when the trial balance will not match, when the side is incorrect. Side is incorrect or the amount is incorrect. If the side is correct and the amount is correct, only the wrong account is there. In that case, there will be no effect on the trial balance. Trial balance will match. And the vice versa. Suppose in future we have paid 50,000, 5,000 rupees for the repair of machine. So repair of machine is a revenue expenditure, but by mistake, the accountant has added in the cost of the machine. So at that time, he has passed the reversed entry, machinery to bank, but he was supposed to pass the entry repair to bank. So in that case, revenue expenditure treated as capital. So errors of principles are those errors which are committed on account of Breach of accounting principles. Breach of accounting principles means revenue expenditure is treated as capital expenditure or capital expenditure is treated as revenue expenditure. So in that case, which error will be there? Error of principle. Fourth error is compensating errors. Compensating errors. Compensating errors, what the name reflect? Compensating errors means the errors which are compensating each other. It means at a time, two errors are there of the same amount. Two errors of same amount. Okay. And one error has nullified the effect of other error. Nullified the effect of other error. So compensating errors are those errors in which effect of one error is nullified by the effect of another error. For example, you have purchased goods from Ram 1000 and from Sham 10,000. So what will be the entry? Ram debit. Sorry, we have purchased, not sold. So purchases account debit to Ram, and the another entry, purchases account debit to Sham. But the amount was reversed. Amount was reversed. In purchases, in Ram's account, it was written 10,000. And in Sham's account, it was written 1,000. So both the entries are incorrect, but there will be no effect on trial balance. Why? Because here you can see Ram's account is credited by 9,000 more. And here you can see Sham's account is credited less by 9,000. So this is less and this is more and the amount is same. So the effect of one error will be nullified. Nullified here means will be zero by the effect of the other error. So one error is compensating the other error. That's why it is known as compensating errors. Now, could you please tell me whether these type of errors will be affecting the trial balance or not? Please tell me first whether these type of errors will be affecting the trial balance or not, because the effect of one error is nullified by the effect of other error. Very good, very good. Ankita, Ambika, Harshita, Shruti, Siddhi, very good. No effect on trial balance. Why? Because in Ram's account, 9,000 is written more. And in Sham's account, both are credited. 9,000 is written less. So there will be no effect on trial balance. So basically effect on trial balance will be there when the wrong amount is entered or wrong side is there. If the side is correct, one amount you were supposed to write in the debit side, you have written in the debit side, but in the wrong account, then there will be no effect on the trial balance. So in short, again, I'm telling you again all the four types of error so that we can go for the numericals. First error, error of omission, which are the entries related to the forgetting. Two type, complete omission, completely we have forgot, then partial omission. One aspect is recorded and other aspect is not recorded. Like in debit side, we have posted in one account and on the another side, we have not posted. Then error of commission. Four examples I told you: wrong posting, wrong carry forwarding, then wrong recording, recorded in the wrong account, then wrong totaling, carry forwarding, and wrong casting. Casting means totaling. One marker question. Define casting. Casting means totaling of an account. Then error of principle, which are committed just because of revenue expenditure is treated revenue to capital and capital to revenue. Any one can be the reason. Like building purchased is a capital expenditure, but you have treated it as a revenue expenditure. Or any installation charges, transportation charges paid on the machinery are always a capital expenditure, but we have treated it as a revenue expenditure. Then last one is the compensating errors. Compensating errors means same time, simultaneously, there will be two errors. Okay. And one error will be nullifying the effect of the another error. Same amount. If one In one account 9,000 is debited more, then the another account 9,000 will be debited less. So same amount, same side, the effect will be nullified. So these errors will definitely not affecting the trial balance. So these also not affect the trial balance. These also not affect the trial balance. Complete omission also not affect the trial balance. So basically, which errors affect the trial balance, in which your trial balance will not match? These type of errors: partial omission, wrong posting, wrong side. If the posting is done in wrong account but in the correct side, then it will be not affecting the trial balance. Wrong posting, wrong account, wrong side. It means you were supposed to post in Ram's account, you have posted in Sham account, but you were supposed to post in debit side, but you have posted in the credit side. Then trial balance must not match. Carry forwarding, not match. Recording in the wrong account, not match. Casting, totaling, not match. And here, trial balance will match, not affecting the trial balance. This also not affecting the trial balance, and this also not affecting the trial balance. So this is all about the errors, type of errors. And one more type of error is there, uh, apart from this classification, that is the one-sided errors or two-sided errors. This is also the one classification: one-sided error and two-sided errors. One-sided errors are those errors which will be affecting the trial balance, means trial balance will not match, will not match. So examples of these errors are like wrong totaling, omitting to the post, errors in carrying forward, and writing a balance in the wrong column, wrong totaling of the trial balance, posting a journal entry on the wrong side. So basically all those four type of errors are here classified in two types: one-sided. All those errors which will be affecting the trial balance are known as uh, one-sided error, and the errors which will not be affecting the trial balance are the two-sided errors, like errors of principle, compensating errors, and complete omission errors. Errors of principle, compensating errors, and errors of complete omission. All these are two-sided errors, and basically these will be not affecting trial balance. Not affecting trial balance. So this is all about the different types of errors and whether they will be affecting the trial balance or not.